All right. Welcome back. All right, almost 3 o'clock. It's 2:50. We're going to look at the market, see what's going on short term, see what's going on. I'm going to start off again. I'm going to emphasize that the positivity rate is 10, upper limits. Okay, just remember that. All right. So, what's going on? Uh, Very simple. We are in this particle move down, and you can only see a particle if you zoom out, right, on a 1 hour. We're looking for evidence of some kind of a correction. We need a correction if we're going to short this. You can't just, willy-nilly go out and short it this deep in the hole. The market now is down from the high 7%. Okay. Um, Again, we talk about those upper limits of that 10, 12, 14% upper limits, and sure enough, they play. Downside, the same limits do not apply per se, okay, because it can drop a lot faster, a lot more um, on the downside than it can on the upside. So what we have now in the Nasdaq is a possible head and shoulders reversal, okay, but it has to break. If it doesn't break, it's just a continuation pattern to the downside. Now the fact that it's spending more and more time in here towards the upper trend line is a positive in terms of a possible breakout. Okay. If you look at it from this perspective, okay, thrust up, correction, breakout. Okay, again, positive for a breakout for today into the close possibly. But again, it's a minute chart. All right, keep that in mind. S&P is down 0.2%, Nasdaq 1.83, and small caps are up 1.9. All right. The 10-year 9.66. It's again forming a bullish setup on a very small time frame, of course, but um, this is the bullish setup. Okay, you see it? This is a very high probability that it's going to break out. So keep that in mind. Now, what happens when interest rates rise? Well, the earnings yield of the S&P 500 is put under pressure. Okay, because the higher the stock price goes, the lower the yield becomes, and the higher the 10-year bond rises, there's compression in here. Something has to give, right? Why would you buy a stock with high risk versus a bond which is low risk, right? The government is always going to bail you out if you're a bondholder. Now, you can argue that the government is bailing out the bond market all day long as well. Valid, I'm with you. But again, these are the rules of the game, and I'm just making you aware of them. We're at 2.79. Okay, and almost all of uh, QE, all of the earnings have been um, posted for Q3, not QE, Q3. All right. Just for my purposes, just taking a little peek here. All right. So for the market internals, let's take a look real quick. S&P down point flat. led by consumer staples, industrials, utilities, and energy. Not good. All right, for the bullish case. And laggers, information technology, consumer discretionary, and communication. You don't want information technology to be lagging. All right. Now we understand why this is happening. We understand that there's a lot of the broader market, the beaten up stocks that are holding the markets up for now. Okay, for the S&P, and that's why you're seeing this disconnect. If you remember about 3, 4 days ago, I was like, this looks really screwed up. You had Nasdaq up, and then you had everything else down. Now you're seeing the opposite. You see Nasdaq down, and all the other indices up. Right, so we're having some kind of craziness going on in the market, but we understand why. The beaten up stocks are performing right now. Last 5 days. Energy, financials, industrials, lagging, consumer, utilities, consumer staples. Information technology is on the bottom half. All right, so that's the market internals. All right, so we need some kind of a correction out of this, okay, so we can go short because the pattern is telling us short, okay. So we need something, and I've cleaned up the charts a lot. I'm going to try to keep them as clean as possible. I was kind of holding the patterns in there before, so when you guys come back the next day and the day after that and so forth, you'll see what the call was, what we expected to happen, and so forth. And again, I'm going to try to be as persistent as possible with streaming because you need to see it in real time as to what I do. Okay. And I'm kind of working through all the kinks and everything, so it's not, you know, it's not easy right now, but hopefully it's going to improve over time. Uh, Again, I'm not a TV personality, I'm not a salesman, so for me, reality, math, facts, and data matter a lot. That's my bread and butter. All right. All right. So it's consolidating. It's coming up at 3 o'clock. Let's see what it does. Obviously, so long as we are in the structure, the bias is to the downside. There's no question about that, right? But there is evidence to suggest uh, that we will possibly um, trade out of this tight particle market and go into a wave market. And then the next move up, remember, the next move up is going to give us the count. So this will be 1, this will become a 2, and then we're going to look for the 3 down. All right. So let's see if it does it today. Maybe not. All right. So again, Nasdaq is down 1.85. Remember, the 2% of the day is the limit. Right? It was as low as 2.38 or something. All right, seems to be stuck. All right, so let me talk a little bit about data. Um, what's happening is you're getting a lot of these perma bulls, these cheerleaders, where they're cherry picking data and people don't notice it. Okay, why are they cherry picking data? Because no matter where price is, no matter what economic data you're looking at, they're always going to tell you about, oh, look, the recovery. Yeah. See, that's great and all, but if somebody doesn't understand the difference between January 2020 and November 10th, 2020, where we were, where we are today, and where the market was, um, to you, you're only hearing good things, and that's it, right? That's all you're hearing. Uh, but unfortunately, that's not the way it is. So a lot of the economic data, I'm going to put up an indicator here. Okay, we are in a downturn. I don't know what this stuff is. I just picked something RSI. So disregard this. But what I want to point out here is that you're seeing something and they're saying, "Oh, look at this. This is wonderful. Look at that." Right? Look at that. It's going up. Oh, wow. Yeah, this is great. Okay? But the market is going down. You see what I'm saying? So, but people don't understand how that works, how that correlates. They're just saying, "Oh, look, the RSI is going higher, the economy is improving, or the stock, in this case, is improving." Well, no, it's going down. Okay, so when you look at these retail sales, when you're looking at these numbers that are coming out, and they're like, "Oh, okay, look, it's back to normal." It's no, 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 no. It's not. There's nothing back to normal. Okay, it's not. It doesn't work like that. You look at the GDP numbers, right? They're still negative, right? You look at the global economy, it's still negative. So you can't say, well, yeah, but it's better than expected. No, that's not the way it works. Okay, you have to understand when a economy has bottomed out. When you're looking at unemployment numbers and saying, well, it's 6.9, yes, but you're not counting the people that have been unemployed more than 26 weeks. You're not counting the people that are receiving benefits, okay, which is 20 plus million people, right? You're not looking at all the stimulus that's been pumped into the market. You're not looking at what it's going to feel like when that stimulus, after 6 months, 9 months, a year, you know, um, goes away. You're not looking at when interest rates rise, like they've been doing now, how that's going to impact the economy. You can't cherry pick data, all right? And this is the salesmanship right now. That's what they're doing. They're selling you this crazy stuff. So be very mindful of what you are looking at. Don't be fooled. Let's take a look at the S&P. Okay, I was showing somebody something. Disregard that. Okay, so what we have in the S&P right now, okay, is a nice drop and a flag that's forming, bearish. Now, ideally, what we want to see is a breakout and then a move down. So then that would become a 1, 2, 3 down. Okay, that would be the better setup. And this is again on a 1 minute chart, and the market has dropped about 4%. Okay, from its recent high. And right now it's just building this structure in here. Okay, so clearly you have a 1, 2, 3, right? 1, 2, 3. Some consolidation at the top here. We're looking for that breakout and then reversal. Let me fix this. Okay. Alternatively, if that doesn't work out today, that's okay, right? It'll come down to this support area and then look for the bounce, lower high, down again. Right? Doesn't mean it can't go all the way to the top. It can, right? And then it starts breaking out, different story. But we're not there yet. We're not there yet. This is going to be the key area right there. 1746. If it manages to come all the way back up here and then break out, okay, then we're going to go to the previous high or close to it, okay? If it doesn't, it will wither away, all right? It will wither away. Same thing with transportations, okay? Now remember that when earnings came out prior to elections and everything, everything, even if they beat, were sold off. Everything. That's a bearish indication. If they thought that this is good, no matter what the elections are, okay, if they thought that was good, then they would have at least maintained it, or 2-3% up, something. Okay, that's not the case. That's not what happened. And everything got sold off. They beat, they didn't beat, didn't matter. And by the way, I'm not saying that it will come all the way down here. It has the potential to come as low as the previous. Okay. Now, with a vaccine in place, looking forward, light at the end of the tunnel, right? You have to believe that the previous low um, is not really in play, because why would you sell something so hard and then um, only to buy it back up again? Unless something really major were to happen. Okay. Real major is something that we're not seeing. Maybe something in the banking system, although I don't think so. I don't believe that. Um, Social unrest, not a smooth transition in politics. Vaccine starts to fail, somebody dies. Lockdowns, the whole 9 yards. Okay, then yeah, we could see it. But clearly, a vaccine is a positive, and if it's not next year, then there's a light at the end of the tunnel, right? And that should hold the markets up. Correction, yeah, we could see something like this. We can see something like this, or something like this. But I put in here this for the potential, what its potential can be based on charting. All right. So we're still waiting for the Nasdaq to make a decision here. It's down 2.15%. We still have that inverse head and shoulders. It's still in play. We can still get a head test and then bounce, right? But we need that correction. We need it. We need it if we're going to go short. It's going to come. It's just, where is it going to come from? That's the question. See, the other nice thing about doing it live is that people can go back later whenever they have time and take a look at and see how I do it in real time, right? Dynamically. It's important. All right, so when you look at the leading indicator, okay, for commercial real estate, it's been decreasing, right? Which kind of makes sense. All right, this is the pattern. Structure below almost. All right, so if this starts to go, you end up with another set of problems that are not factored in right now. Airlines flattened out, right? So if you're looking for economic growth, right, and you're rising in this manner, you know, it's not going to be anytime soon, right? These are hardcore, deep um, data, right? This is real time shit. It's not oh, uh, it's going to go up someday. You look at the TSA numbers, okay, they're flat. They're flat, but it goes from 500 up to 900, back to 500, and anywhere in between. Okay. The travel from last year has been more or less consistent. Sure, there's going to be some drops offs, but more or less it's between 2 and 2.5 million. Okay, so we're way below that. The argument that I hear often is, well, there's parts of the economy that are not doing so good, and then parts. Well, that's always true. There's always going to be parts of the economy not performing and other parts doing really good. The difference this time is that um, you need the really beaten up stocks, uh, I'm sorry, sectors, to really start to improve. You really need that. You can't keep showing the good part of the economy and saying, look, we're going back to normal. It's not good enough. It's not good enough because the bad sectors are really, really, really bad. Okay. All right. So 212, I'm sorry, 312 is kind of drifting away. Taking a look at Germany. Little correction pop. Flattening out a little bit. UK. Popped, corrected. Moving up. Let's put some volume on this. See what's going on there. New point of controls all the way down here now. Used to be up top at 12,000. Now it's down to 11,600. Now, in terms of this garbage that Trump is trying to pull, uh, first you come up with a claim and then you run out looking for evidence. I mean, this is such faulty logic. But you know what? Millions and millions and millions of Americans are falling for it. It doesn't make sense to me, right? It's the same thing MMT does. They put the cart ahead of the horse. You can't go and call the police and say there's a car accident at this intersection. Bring the ambulance, fire trucks. It's a really bad accident. Uh, you know, bring the SWAT. Bring I don't know, helicopters, U2 Hawkeyes and frogmen and whatever. And then they all get there, and then they're like, okay, where's the accident? Well, wait, it's coming. Let me go find it. Right? It's obvious. I'm making it very obvious. But that's what's going on right now. There's no evidence whatsoever of any fraud. Yet people believe, some people believe that there is. Why? Because Trump said so. Okay, so he made a claim but there's no evidence. That's not the way it works. First you find the evidence, then you make the claim. And this, I have to believe, has to be kind of weighing on the market, right? That there's enough people that are stupid enough to believe these things that could cause a problem. There has to be some aspect to that affecting the market, some percentage. It's just insane, absolutely insane. I'll say it again. He's like the crazy girlfriend that just won't leave you alone, and it's just, making your life miserable. It's or boyfriend, if you're a female. It's just absolutely insane. Really smart people that believe in this crap, that I used to respect. Now I'm like, this guy's crazy, or girl. All right, S&P point of control is exactly where we are. Okay. Small caps, we can't see it, but we can see it on the IWM, right where it is. Okay, this is where point of control now is. VIX, a little bit of a bounce back, okay, but it's still below the rising trend line. Right, it's still below it. Jets have really pulled back, the airlines, without a really big bounce, right? So you got this wedge pattern, big gap, right? Big void down here. Mortgage delinquencies, okay, foreclosures, still way below, and you got to believe this is because of the helicopter money. And as I mentioned yesterday, first you had zero interest rates, then you had QE, now you're having helicopter money, and now you got to believe that the helicopter money is not going to go away. Just like QE was, we'll normalize when everything goes back to normal. Never normalized. Okay, same thing with this helicopter money. They're going to tell you, yeah, we're going to stop it at some point. We're going to do this. We're going to do. It's not going to go away. I'm telling you. You're going to sit here and you're going to remember me on this day, right? That's not going to go away. And then they're going to tell you, well, the economy is fine. Look, Logan is going to come out. Yeah, look, everything is fine. The economy is booming. Ridiculous, ridiculous. It's just they don't realize, they don't understand what's really happening. Anyway, I'll be right back.
Mic off. Mic on.
Alrighty, I am back. Okay. So again, we are waiting for this to break out. Okay. We need to see this break out. We need to see this correct. All right. And then if we have the structure to take a short, then we'll take it. But this whipsaw of going straight up and down, you know, at some point it's going to start to diminish, right? Start compressing, and then it's going to make its decision. Does it want to go to all-time highs or does it want to go back down? It's kind of like the same thing here, right? We kind of saw the same thing. Oops. We had a big drop, right? And then it started to pop, went sideways, compressed, and then resolved to the upside, right? And then once it did that, then it started to collapse. Then we got the counter move. Now another counter move. So now we're looking for another one up, and then see where this ultimately resolves itself. Is it going to be up or is it going to be down? Okay. For right now, we're only focused on this part. All right. Again, market is the Nasdaq, I should say, is down 7% from the high. Okay. And we're waiting for a correction. Be right back. Anybody have any questions? Hello, Alessandro.
Mic off. Mic on. Mic off. Mic on. Mic feedback off. Mic feedback on.
Okay, I am back. All right, quickly, let's take a look at the dollar. Okay, kind of lingering, doing nothing, trying to hang on. Right, the red line is where the structure is. Taking a look at the 10-year, came up. We got that bullish setup right now, right? Little cup and handle thing going. All right. Again, yes, we're up against resistance, but this is typically a very high probability trade to the upside. Doesn't mean it has to go to the moon, but that it will resolve to the upside is a high probability. Um, let's take a look at Bitcoin. We haven't talked about that. You know, what a wonderful performance by Bitcoin, right? Uh, high base right at the top of the structure. Okay, a lot of volatility. Might need to correct a little bit more. I wouldn't be surprised. Okay, through time. All right, so a little bit more, and then another uh, move up. Another move up. Gold trying to stabilize in here. Commodities are holding the breakout. That's good. Okay, it's a good sign. All right. So here's the Nasdaq again pushing towards that line to the upside. Okay. This will be the third test today. If it gets up there. Not there yet, but if it does go up there, it will be the third test for today. Now again, remember that we started here. We had this structure here. Broke out, failed. Then we got this structure, broke out, failed. But look at the way they broke out. Sharp, sharp, right? This is not the same kind of breakout. Okay. Consolidated, fell back into structure. Now it's consolidated again. All right. So subtleties for sure, but it's spending more time towards the top than the bottom, like it did here. Here we're spending time at the bottom. Relief, back down. Okay, in the middle of nowhere, back down, popped, and now it's getting ready for the next move up. And we do have the head and shoulders, right? in play. So, all right. Any questions? Again, guys, don't forget, come down to patreon.com/RealMacro. Patreon.com/RealMacro and subscribe. Don't forget, like and subscribe the video. Otherwise, for some reason, the algorithms are not going uh, to push the videos, even though this is live. Believe me, I hate saying it. I feel like a billboard. It's not who I am, but I have to say it. It's a shame because my old YouTube channel had 3,500 subscribers. It was great. It was growing really really fast. And then of course they came and attacked it and whatever. Something we haven't looked at in a while. See, is there any changes? Still August. Still very laggy. Very laggy. I'm surprised I haven't updated this. Hmm. Right, what's the latest data here? Coronavirus, 10.5 million cases, 245,000 deaths. Okay. Now we're looking for this to rise. If this rises, oh boy, even one. I mean, you have a lot more cases now. Before, it used to fluctuate like crazy. But for now, a 1% rise, that would be very bad. All right. 10, 11. Nothing for that. Any updates on corporate profits? We should see a bounce in corporate profits. Um, but again, these things, they lag so much. They're very frustrating. All right, so credit card delinquencies are down. Okay. Real gross domestic product has popped, as it should. 18.5 trillion. All right, and of course, debt, public debt to GDP continues to drop. M2 money supply continues to rise. hmm Personal savings rates continues to drop. Right, so much for that. Our savings, our savings, my ass. MMT says government deficits equals our savings. Woohoo! Yeah, nothing ours about that. Now let's talk a little bit about the big four. Right, um, employment. How many people working? Industrial production. It's just a small part of the economy. Doesn't matter. It matters. For the big four, this matters. Industrial production matters. Um, real sales. Okay. You see, it's popping, right? It makes you think like, oh, everything is back to normal. Everything is great. Yeah, but look at the other ones, right? Real income. Okay. It's still way below where it was. I don't know if you can see it very good. So this is more of an isolator. Okay, pent-up demand is going to show up fine. All right, then you look at the real income, right, and you're going to see there's a suppression of income. Right, then you look at unemployment. Unemployment was up here, now it's down here. So you're making less money, less people working, okay, and then industrial production is kind of flattening out at the same time. Kalimera φίλε μου, πώς πας? Έχουμε μπλέξει με τρελούς. Okay, so these are the core fundamental macro stuff. And while they're telling you, yeah, everything is great, everything is going great, yeah, but it's not. You know, you're looking at the isolators um, that are short term and they look great, but the real deep industrial employment wages, it's still way off. They're still way off. All right. And again, permabulls, you know, salesmen, one-directional people, they're always going to go, oh, let's look here. Let's look here. Let's look down here. This is what matters. No, because you took a huge collapse here, and you're still nowhere near where you should be. And then we go from V-shaped recoveries to K-shaped recoveries to element of P recoveries. Now the Senate has been back November 9th, yesterday, and today. Any words in stimulus? Nada. Nothing. All right, so it's 3:40 in the afternoon. Point of control, holding. Inverse head and shoulders still in play. What happened to Alibaba? Down 8%. Interesting. Down 17% from the highs. Something must have happened there. There's another Chinese company. It's down 5.76%. This is one of the good ones. From the high, down 10%. JD is another one of those Chinese companies. Down 15%, 6% today alone. Again, this is one of these indicators that I follow. Old school stocks, Procter and Gamble, GE, Boeing, IBM. All right, they haven't performed as well as the beaten up stocks. That's interesting. Home builders, right? Double top. Industrials, still double top, but it's holding above the previous high. Consumer staples, double top. Utilities, lower high, double top. XLY. I would say that's a rising F flag. Um, this is XLY divided by the S&P. Right? XLY again is the consumer discretionary, and very big reversal since November 4th. So past 6 days has been a big move to the downside. That's negative. Royal Caribbean, double top. This is the beaten up stocks, right? Royal Caribbean, Delta, Avis. Big move to the upside. Another one here, which is Hilton, Diana Shipping's Card, Delta, Royal Caribbean, divided by the NDX. And this is what I'm talking about, right? That these beaten up stocks are outperforming the Nasdaq. And that's why the market looks so confused. Look at that. Big move to the upside. 16% move. All right. So always pay attention to these ratios. See if there's a shift in the market. Now these do occur, right? Obviously these do occur. You want to see if it's sustainable. All right. All right. Boeing is underperforming Airbus right now. Okay. Flat. S&P priced in gold is pushing higher. Broke out. Okay, we were looking for the downside. It came, it tested, and then popped. Double top. Right? Semiconductors versus Nasdaq. Triple top. Gold is underperforming small caps. Right? That's risk on. Gold to NDX. Stable. Hotel. This is a hotel group. Haven't looked at it in a while. Okay. Big pop. Marriott. Big pop. All right. Still stuck. It's been stuck there now for how long? Jeez. 2.5 hours. Not making a decision what it wants to do. All right, 14 minutes left in the trading session, and Nasdaq is down 1.77. S&P is down flat. Small caps up. Transportation up. Fangs down 2%. Let's take a look at the VIX. Should be falling. Yep, it's falling, so that's good. That's good for the trade to the long side in Nasdaq. Volatility coming off. Anybody have any questions? Just looking on Twitter here. Joe Biden says it's an embarrassment that Trump won't concede. Of course it is. Of course. All right. VIX now below 25. And it's 350. This is when, for some reason, this is when shit happens. So what we're waiting for now is that breakout, right? I'll just mark it on there.
Mic off. Mic on. Mic feedback off. Mic feedback on.
All right, I'm back. Well, last 2 minutes and no fireworks, just sitting there at point of control. All right. So that's pretty much it for the day. All right. So let's look at the end of day. Consumer staples, energies, and industrials led, lagged by technology, consumers, and communications. All right, last 5 days, nothing has changed. All right, so um, that's it. We've covered as much as we possibly could. We looked at the bigger time frame. We cleaned up the charts. We talked a little bit about macro economics, a little bit about politics. Um, markets are going to be a little bit confused for now until it resolves itself. Either the Nasdaq is going to start rising again along with the beaten up stocks, okay, or the beaten up stocks are going to start to collapse at some point. Possibly see the Nasdaq, not possibly. At some point, it's going to correct. Right? There's no question about this. This will correct at some point. Okay, settle in, see where it settles in, and then go from there. All right. So that's it. Thank you very much, guys. Anybody have any questions? Anything? Going once, going twice. Don't forget patreon.com/realmacro. Come on down, subscribe. 24 hours a day live chat. Thank you, Alessandro, and I'll talk to you guys soon. Take care. Bye bye.